This scenario is manufacturing to stock with overhead costs built in. So one of the first questions we ask when we are discussing operations and workflow with manufacturing prospects is if they purchase to stock or to order. To stock would mean that they need to know a quantity on hand on their shelf at any given time. We recently had a customer who manufactures vitamin supplements. We first wanted to understand their sales process. They currently make a sale, and if there is not enough product on the shelf, they do a manufacturing run for that SKU. The run will always be the same volume of end product, 100 bottles, so they manufacture to stock. The costs associated with the assemblies are what we want to look at the most. They measure different powders, have capsules, cotton that goes into the bottles, and the bottle themselves. These costs are pretty minimal for the actual components. However, they have labor and machining costs that bulk up the value of each bottle created. So the customer wants to build some stated cost into the finished good. So we're going to go ahead and set up the finished good bottle of greatness by creating a new inventory assembly. So first of all, you need to make sure that assemblies or inventory is turned on in your file. So I'm going to turn on inventory. I'm also going to enable multiple units of measure. So this is a feature that's available in Premier and Enterprise. Okay, so now I'm going to go to my items list, and I'm going to create a new item, and I'm going to create an inventory assembly called Bottle of Greatness. Okay. Once we have this Bottle of Greatness turned on or set up, right, we're going to choose the cost of goods sold that we want to use. So I'm going to just leave it as cost of goods sold. I'm going to put in a sales price of $150 per bottle. And then I'm going to choose the income account that it's going to hit when we sell it. So I'm just going to choose revenue. And set it up as an income account. And the asset account, which you can't see because we're in this HD version, so let me go ahead and switch my view to the left icon bar. So we're going to choose the asset account and say finished goods as a sub under inventory asset. So it's oops, I don't know if I could spell. It's a sub account under inventory asset. So set of finished goods, it says it's another current asset account. It's a sub account under inventory asset, say save and close. Okay, so now we're going to move into the components level. And that's this area right here, the bill of materials level. So I'm going to click the full view because then we can see it, more of it basically. All right, so the first item that we're going to set up, or the first component, is going to be special powder. And of course it's not set up yet, so I'm going to say I'm going to add it, and it's going to be an inventory part. The unit of measure, I'm going to go ahead and add a new one using weights. And so the base unit of measure is gram, so we use it in the per gram. But when we buy it per pound from our vendor. So I'm going to say a pound and check that off here. So I purchase it, the default is a pound. When I sell it or use it, it's a gram, and I'm not shipping it, so I don't have to do that. And we're just going to leave it as weight by gram. Okay, so we have weight by gram of special powder. I'll go ahead and copy this down. Now when we put in the cost here, so this is just a default cost. It's not going to be the actual value of the product. So QuickBooks uses the average value or the average cost, or have it set up to use average cost. But this cost here is, again, only going to be a default when I enter the bill or when I enter the purchase order. Okay, but when I actually enter the bill, if it's a different cost, I can change that on the bill itself. So I'm going to put in here 12 cents. The cost of goods sold account. Now this is a component that goes into a finished good, so I should never use this cost of goods sold account. So I'm just going to say miscellaneous COGS. Okay, and set it up as a cost of goods sold account. The income account, same thing. I should never be selling this item, so I'm going to set it up as miscellaneous income. Now the reason I set it up this way is because that way if I ever happen to sell it, it'll hit miscellaneous income, and then it'll be a trigger for me to go check out, like, why are we selling special powder? We never sell special powder. So anyway, we can deal with it at that point. That's just one of the little tricks that I use. Now down here below to the asset account, we're going to call materials asset, and it's going to be a sub account again under inventory asset account. And we'll say okay. And then next we're going to go ahead and add the super powder, which is again going to be another inventory asset or inventory part. So super powder, and I have to add it, inventory part. I'm not going to use a unit of measure this time. We just buy by the each and sell by the each. Cost of goods sold again is just a default one, and I don't expect to ever sell it, so miscellaneous COGS, miscellaneous income, and choose materials asset. Now notice since I put these costs in here, they have these grayed out columns that are starting to calculate my total cost of this build. Again, this is just a default cost. This isn't going to be our actual average cost when we do the builds. When we do the builds, it's going to pull the actual average costs from the individual components. Okay. So special powder, I forgot to add in here. We're going to use 100 grams per 1 bottle of greatness. Super powder, we're going to use 120 eaches per 1 bottle of greatness. Okay, moving on. The next thing, we're going to have the capsules. Capsule caseins. And this is again going to be an inventory part. Not going to use the unit of measure. The cost is, I'm going to leave it blank so you can see what it looks like. Cost of goods sold, and never expect to sell these. So miscellaneous income. Okay, and the inventory asset is going to be material asset. Okay. So again, in here, since I left it as 0, notice that it's building 0 cost into the finished good, even though, you know, I have the capsule casings, I'm going to use 100 of them, and they will have a cost, right, when I actually build the finished good, and we'll look at that. Now next I'm going to add the cotton swab. Now this is immaterial, so we'll use a non-inventory part for this. The cost is so low, we don't care about tracking this in inventory. We don't care how many cotton swabs we have on hand. So I'm going to make it a non-inventory part. I'm going to choose to make it a double-sided item. Okay. And our cost of goods sold account will be material cost of goods sold, which will be a cost of goods sold account type. Okay. And the cost is going to be $1. It's recommended to use this cost as $1 because this is what we're going to use when this is what the multiplier is when you build in a stated cost. Okay, it makes the conversion a lot easier because you're starting at $1. The income account is just going to be miscellaneous income again because we don't ever expect to actually sell cotton swabs. Okay. So now cotton swabs is $1. The quantity we're going to use is 0.02. So basically we're building in 2 cents into each bottle of greatness, right? And that is what the cost of the cotton swab is. So when we purchase this part, it's going to debit cost of goods sold and credit accounts payable, right? Or when we have the bill entered. We'll look at that all in a minute. When we use this part in an assembly, it's going to debit finished goods, right? Finished goods is going to go up, and it's going to credit cost of goods sold. So cost of goods sold is going to go down in the period that you mark the build final, right? So whatever the date is on the build assembly, it's going to credit cost of goods sold. You can choose to run this as an other current asset account using, with materials WIP or something like that. However, because it's such an immaterial cost, we're choosing to run it through the P&L. Next, we're going to go ahead and set up the labor cost of $18. So I'm going to create a new item, again, called assembly labor or labor WIP. Let's say assembly labor. Oops, let me add the IR. So it's going to be a service item. Again, it's going to be double-sided. So you want to check that little box in the middle there. Okay. I'm going to use the stated cost of $1 to make that conversion very easy. On the expense account side, we're going to use WIP labor. And WIP labor is going to be an other current asset under inventory assets. The sales account doesn't really matter, so I'm going to call it miscellaneous income, right? We never expect to actually sell this product. So with this, $18. So with this, when we pay the assembly team, right, our workers, it's going to debit WIP labor and it's going to credit cash or payroll payable or whatever it is. Then when we build the assembly, QuickBooks will debit the finished goods and it will credit WIP labor. The balance left in that WIP labor at the end of the period, like the end of the month or the end of the quarter, can be written off to a cost of goods sold account for direct labor. If there's a big variance left in the WIP labor account, we need to talk about adjusting our stated costs per item if it's too high, if the WIP labor is running negative, and too low if it's running positive. Okay? And again, we'll look at this in just a minute. So now I'm also going to add in the machining costs. So I'm going to create an item called machining. Again, it's going to be a service item. Okay, so in this instance, what our customer has is that they lease their machine, right? So this is not a product that they own, and they're trying to build some of the cost of the machine into the finished good again. So we're going to make it a double-sided item. The cost is going to be $1 because it's easy to do that conversion. It's going to go into WIP machining, which again is going to be an other current asset under inventory assets. Okay, I never expect to sell it, so I'm going to choose miscellaneous income. Say OK, and we're going to build $12 of cost in. So when I get a bill from the leasing company, it will debit WIP machining and credit accounts payable. And then when we build the assembly, it's going to debit finished goods and credit WIP machining. And we want to look at the balance in the machining costs frequently as well, just to be sure we're accurate on our stated costs in our build. So it's going to be the same as WIP labor, where if it's too high, then it's going to be running negative, and if it's too low, it's going to be running positive. Finally, we'll add the item for bottles as an inventory part. So bottles as an inventory part. It's going to hit cost of goods sold, miscellaneous when we sell it because we don't expect to sell it individually. It's going to hit miscellaneous income for income. We don't expect to sell it. The inventory asset is going to go to materials asset. Okay, and we use 1, right, per finished bottle of greatness. Now that we have the finished good set up, so everything's set up for our bill of materials, let's go in and actually put in some transactions to see what happens. So first we're going to enter a bill, and the bill is going to go to ABC Machine Company. And I'm just going to quick add that vendor. The amount is going to be $1,500, and I'm going to choose the item machining, right? $1,500, and I don't care about the quantity. I'm just putting $1,500 into that account. And we'll do a second bill. Now I'm going to enter a bill for our inventory items, and I'm just going to go to, sample vendor. Now, normally you don't buy all your components from the same vendor, but I'm entering them all in one bill just to get them in the system for now. So I'm going to put in special powder, and we buy 800 pounds. Remember, we had that unit of measure conversion, and it's going to be for $40,000. Okay. Then we have super powder, and we buy 98,000 eaches at 11 cents each. And we have our capsule caseins, so we're going to have 10,000 of these at 5 cents each. And then we have our cotton swab, and we're just going to buy $56 of that. And then we have our bottles, not our bottles of greatness, right? Just our bottles. And we are going to buy 5,000 of these at $1 each. Okay. Now, I'm not dealing with the cash side, right? We can pay our bills later, but this is just showing of what items we have. This is the same as entering an item receipt as well. All right, finally, I should be entering payroll for the direct labor, but I'm just going to write a check in here instead. So I'm going to go into banking, write checks. I need to set up a checking account. So I'm just going to call it bank. And I'm going to pay Rob Adams, who I'm going to quick add as an employee. And I'm not going to set up payroll right now. And it's going to be for $1,300. Okay. Now, I recommend choosing the item when you're making your payroll or when you're paying people, right? You want to make sure to choose the item assembly labor. However, if you can't for whatever reason or don't, you can always post it straight to WIP labor on your chart of accounts as well using the expenses tab. So I just wanted to show you what it looks like doing it that way. You do have the option to do it that way. All right, so I'm going to go ahead and say save and close. So now let's take a look at what we put in the system so far. So if we go in and we run our balance sheet, okay, so we have negative $1,300 because we wrote that check to Rob. We have materials asset of $51,000. We have WIP labor of $1,300, and we have machining labor of $1,500, and then we have some payables. And then when we look at our P&L, we have that $56 for our cotton swabs. Okay. Now that I have a balance here for our transactions, oh, just real quick. Also, materials asset, right? You should always be able to run your inventory valuation summary report to be able to tie out. So there's our $51,281. Let me switch it back over here. $51,281. Okay. So now I'm going to go ahead and put in the actual assembly. So I'm going to build the bottle of greatness. Okay. And for some reason, I don't have enough quantity on hand to build. So let me see. I only have quantity on hand on one of my bottles. So let me go back to my bill. Enter bills for my bottles. I put that in the description. That's why. 5,000. Quantity of one. Okay, and recalculate my bill. Save and close. Okay, so now I have enough of those on hand. Clear out. Bottle of greatness. I can build 100. So let me build 100. And I'm going to say build a new. And then go previous. And then run our transaction journal report to see what's happening behind the scenes on this transaction. So you can see here, it has built in $6,000 of finished goods by taking out $1,000 from materials for special powder, $1,000 for $1,300 for super powder, and $500 for casings. It built $2 of cost in out of materials cost of goods sold for our cotton swabs. Then we have WIP labor of $1,800 that was built in, $1,200 of machining, and then $100 for the bottles. Okay, so let's go take a look at our balance sheet and see the results. So now we have still the $1,300 coming out of the bank, right? But now we have finished goods asset of $6,024.30. Materials assets have gone down some, so we have $53,000 in here. And again, we should be able to run our inventory valuation report to see the tie out to our balance sheet. There's our 53 to 5770 and our 6024. Okay. Now we go down into our WIP labor and our WIP machining area. So in this scenario, we're going to pretend that this was the only finished good that was built using this labor and this machining cost. So if that's the case, then having the negative $500 of labor here means we overstated the cost in our finished goods by $500 for labor, right? We thought it would be $1,300, but we built in a stated cost of $1,800. So we overstated the cost of labor in our finished good. So that's our opportunity to come back and say, should we change that stated labor value that we're building in? Now, when it comes to WIP machining, we have a positive amount sitting here. So that means that we understated our machining costs in the finished goods. Okay. And then also when we go in and we look at our profit and loss, so our profit and loss went down by $2, right? Because we built $2 of cost from the materials cost of goods sold into the finished good. So you can see that here. There's the bill for the original 56. Now we're taking out $2 and putting it towards the finished good cost. Okay. Finally, if we go into the item itself, so bottle of greatness, we can see, switch it back to that left icon bar, the average cost per bottle is $60.24. Okay, so it picked up the average cost per bottle for us here, and that's what the value is going to be used when we sell the product. So that's what's going to hit cost of goods sold when we sell each bottle of greatness. So this is an example of using stated costs when building assemblies.